Good afternoon, friends. Welcome to Nifty Times Now. Today, I'm going to make a series of videos based on this document. It's the trading discussion point. So, first we see a content like that is we take this content. If you see, this is the content where they are asking a trading discussion points, which is the correct decision points for an intraday traders, which is a correct strategy or is a constant strategy for going into the trade. Okay, so we are going to discuss on this document. Okay, I'm going to make a video. Whatever I learned, I'm going to share it. So in this document, if you can see, I'm just expanding. So they have shown three different strategies. One is the trend line. The second, they use a strategy using a moving average. And third is they are used a Fibonacci, like it is from point A to point B. Okay, so first we go one by one. Based on the trend lines, which is the correct decision points for an intraday trader to enter into the trade. Okay, so they are asking us a question in this document, which is the correct and a standard or what you call constant place where as an intraday trader we can enter into the trade. They are asking us a question, so I can show you the same questions. We just go and plot it in the Nifty chart. Okay, as an intraday trader. So first I'm using a strategy as a trend line based. I'm going to take a trade on the trend line base. So we try to draw a trend line. Okay, so a trend line is drawn based on a swing, like it is when there is a swing has happened. So we have from one point the first swings. Okay, from this point I have we can draw a trend line from this to this. Okay, this is one trend line from this point. Okay, and the same, like the market went up and it respected this trend line and it again went up and had a fall. So now the trend line, we keep on adding, we keep on marking the trend lines based on the market sentiments, because we are trying to find which is a constant, okay, a decision point. So if I use the trend line, when the first trend is broken, now my trend line gets changed. Okay, so now I'm going to draw another trend line based on the second low. Okay, I'm connecting this low to this low. Okay, so again the market went up and it had a fall. It has broken this, then again I'm making one more trend line. Okay, so this is what they are shown in that screen and asking. So we have from one point we are drawing three different trend lines, and which is the correct decision points for an intraday trader to enter the trade. Okay, this is what they are asking as a question. The second thing is they are telling, okay, the second strategy they are using a moving average. Okay, they have a 3 moving average and they're saying which is the correct decision points as an intraday trader will take based on the crossover and enter into the trade. So that also we try to plot this in the chart and see. I hope you understood what I am trying to explain is the strategy is a confusion strategy we are into, because there is no constant, okay, strategy where when I use the trend line, it is not constant. It keeps on changing as an intraday trader. See, in this one day trading itself, it keep on changing because the market sentiments keep on changing. So that is why they are asking which is the correct strategy where we can use as a constant decision points. Okay, as a constant to take a decision points to enter into the trade. So hope you understood this. Second, I'll just remove all these drawings, remove the drawings. The second, they said, okay, now some will trade with the base on the trend lines. Some intraday traders will use moving average. I'm just opening all the moving averages. Okay, I have 3 moving average. One is with 9. We can see settings. One is the time frame is 9, 20. Then I have 50. Okay, so if you see the market is gone from here, it has gone, and there is a reversal happen from here. And whenever the crossover happens, the market is reversed here, but the crossover is happening here. So when to enter the trade? After this crossover done, then again the market came down, again it's going up. Then again there is one more crossover happening. So there is no constant place or the levels where as an intraday trader we can take a decision as a decision point where to enter into the trade, because the market sentiment is keep on changing based on the demands and supplies. This is what they are trying to say. If I enter a trade, the market is reversed here, but I'm getting an entry only the crossover is happening here. By the moment the crossover happening, the market is going up. You've seen this, based on this example. This is what they're trying to say in the second example. They're showing this. They are showing 3 examples in this ebook and asking us a question, which is the correct place, which is the constant strategy where we can take a decision points to enter into the. The third, they're showing us point A to point B and point C. The movement is happening from here, it has come down, it has going here. So this basically they are trying to say, we use a strategy using a Fibonacci. So Fibonacci, I'll draw the Fibonacci. This is second one we have gone through. I'm just hiding this. The third one is I'm using a movement like it is from point A to point. Now I'm saying that is the market has reversed from here. So there is one I has been formed. I'm making a Fibonacci here from year to year. I'm making a Fibonacci from this I to here, and there is one swing has happened. So I'm making a Fibonacci for the bearish movement. So I mark a Fibonacci here. This is point A and this will be point B. I'm just drawing that. If you see, they're saying one is point A and point B. Again the market has come here, again the market is going here. So what happened is at this point of time, I'm just showing at this point of time I draw a Fibonacci from this point to this. Slowly after some times due to market sentiments, the movement has happened. Now I have to extend my Fibonacci. If I show you, I have to extend my Fibonacci to this level. Now the levels are getting changed. Now from here again it's going up. So that is what they are again asking 3 different scenarios of strategy, the question, which is the standard, a constant strategy where we can use to make our decision to enter into trade as an intraday trader. So far we have seen 3 different strategies. The first one is a trend line based, second is moving average, the third is fib. When you want to draw a fib on the intraday, the market sentiments is keep on changing. So this is not fixed, correct? This is not constant. This fib which I drawn is not constant. It's keep on changing. So that is why in this ebook they are asking which is the constant and a correct strategy where as an intraday trader to use and take a trade. So all these 3 strategies which you have seen is, for me, it's showing as a confusion strategy, correct? As I said, I showed you earlier, if I open this, there is the crossover is happening here, the market is coming down, market is taken a reversal here, but the crossover is happening. By the time the crossover is happening, the market is going up. So likewise, if I draw a trend line also, I draw a trend line from this low to this low first. Suddenly the another low is being formed. Then I have to keep on drawing the trend lines, and at which trend lines I have to take conditions. When I say it has crossed this trend line, the market is coming down. Then it break this trend line and market is going up. So there is confusion. These strategies are called a confusion strategy. So I'm closing this video as an example of the first part. So I'll be releasing a series of 10 or 8 series based on this ebook. Whatever knowledge I gained, I'm trying to impart through this video. I think you friends, this video helps you to understand as an intraday trader which is the correct strategy. So strategy which we had discussed today, the 3 strategies, is totally a confusion strategy. Thanks friends. We'll see you in the next video.